Taking the cues from the global markets, the virus panic hit Indian markets hard in today's session. Benchmark indices, the Sensex and the Nifty, witnessing major cuts in the first 15 minutes of trading itself. Sensex slipped below the 30,000 mark, while the Nifty hit a 3-year low. Meanwhile, the Indian rupee also cracked to record lows against the US dollar, and this led to a trading halt of 45 minutes across all equity and derivatives markets across the country. Trading resumed at 10:20 a.m. today, and Indian markets staged a mild recovery. Sensex saw a pullback of 1,800 points, taking it above the 30,000 mark. Nifty, which tanked to nearly 8,400 levels, recorded in the reopening, traded above 9,500 levels. Rupee also recovering from the day's lows, currently trading at 73 rupees 97 paise against the US dollar. The panic in the emerging markets has trickled from the global markets. In fact, the Thursday trading on Wall Street saw the worst session since the Black Monday crash of the year 1987. And Dow Jones closed with 10% losses, along with Nasdaq and S&P losing over 9%. Shares in the Asian markets, apart from India, also remained under pressure. Tokyo's Nikkei sank 3%, while Hong Kong's Hang Seng and South Korea's Kospi were also down over 3%. Time now to listen to Chief Economic Advisor of India, K. Subramanian, speaking on the outbreak as well as the volatile markets.
In my view, the current developments in the markets are all related to global factors. I think if we actually look at the number of countries that have had a huge decline in their stock prices since the 31st of January, if we look at the period from 31st of January to the 12th of March, these countries, all these countries, Russia, Brazil, France, Germany, Argentina, UK, US and Japan, all these countries have had more than a 20% decline in their stock prices, in the stock markets, and India is actually is below them. So firstly, what we are seeing currently is actually a reflection of some of the global factors related to the coronavirus episode. Now, what I want to actually point out is on various aspects relating to the Indian economy. What we are seeing over the last few days is primarily a reflection of global factors. And as someone who's actually taught finance, one of the first things I tell is my students is that stock markets oftentimes actually react both with greed and with fear. Currently, there's actually some fear because of the coronavirus episodes, which given what I've spoken in terms of the fundamentals and the some of the macro measures, it clearly seems to be driven by global factors and actually some amount of the fear sentiment, which I would expect actually for them to over the next few weeks to actually come down.